Hello and welcome to another update video about HBAR. Yeah, HBAR didn't really join the recent rally, also didn't really join the recent sell-off. It's just sort of very stable. It's just moving, in my opinion, in this larger triangle. It's an Elliott Wave triangle I'm tracking here. A, B, C, D, E would be the preferred Elliott Wave scenario, a triangle. Alternatively, we can also label it a little bit differently and would say that we don't deal here with a D and an E of the triangle, but it could indeed be a 5-wave move down in a wave 1, and this could be a wave 2, but it doesn't make a difference, and it should sell off afterwards as well. It doesn't make any difference really, so it's a purely academic task here to try to decipher what it could be. If the two wave counts align, it is not so important. What is important to understand is that the resistance for both of them is very similar. And if we are actually the same, and if we see a break above resistance, which is sort of here an overlay, it's quite interesting. We've got the red resistance zone, which is between 5.86 cents and 6.7 cents, which is Fibonacci resistance. And then the white box basically is the target for the E wave. So you've got different ways of measuring. Funny enough, they both align. So we'll see if we get there. It's very weak though, so I'm not sure if it's going to get there really, or maybe a little bit closer at least. There's no need to get there, but it would be great to get at least above the A wave high at 5.5 cents to get there. And then somewhere there, a rejection to the downside could be an interesting short trade, maybe with a stop above that August high. We will see if we see a small reaction in that box, because then it could send it down to below the January lows. Okay, yeah, so below 3.5 cents. This is still the base case. And if you're looking at this triangle, I consider that, as I said, A, B, C, D, E. The triangle itself will have to be relabeled if we see a break above the August high, which would be the C wave high. At the same time, not only relabeling would be needed, it would also, in my opinion, make this entire triangle less likely and less reliable. It wouldn't necessarily be bullish, but it would certainly unlock the potential for a larger corrective rally to the upside. Looking at further resistance along the way then, I mean, again, if we break above Fibonacci resistance, it would mean it also breaks above the trend line. So I think there are really good odds here to find a rejection there. Obviously, it's resistance, Fibonacci resistance, it's the target, and it's also just below the descending trend line. So a break above it, again, could send us up to the C wave high at 7.5 cents, and then what I've labeled as A wave high at 9.9 cents. So basically a 10-cent level, of course, psychological significant resistance. So that means in the short term, expectations would be for a short-term potential rally. Doesn't need to be aggressive, but I think the odds are in favor of a bit of a relief rally after that correction here that occurred between August and the September lows. So against the September lows, the focus can be higher short term, but eventually this is just an Elliott Wave triangle, and the overall idea sentiment is still that another low should take place here. If everything goes according to plan and according to the wave count here. Now, at the moment, I'm labeling this E wave as an ABC structure. So the A wave here, a corrective move. It looks impulsive, but it's actually a 3-wave move. This here looks like a B wave, and then here the C wave could take us into the box. You can also use the Fibonacci extensions just to take a look at this microstructure. And a very common target would be the 1-to-1 ratio at 5.9 cents. The 1.618 extension at 6.6. Again, funny enough, they also point into this target range. Yeah, not much more to add. I think at the moment I'm watching for a potential short-term rally, which will get more likely if the recent highs are broken. So if I zoom in a little bit, you can see that here, these recent highs, short-term resistance is at 5.2 cents. And a break above it can really take the price into this region, with maybe short-term resistance at the 5.5 cent level, which is here the A wave high, okay? So yeah, I don't think there is much more to add. So I think the trajectory and the expectations are clear. Would have to change my view to something more directly bearish if there is a break below the the September low. And that's actually at 4.5 cents. So if that happens, then yeah, we probably go down more directly, which again would be in line with the base case, which is that we should get another low here. Yeah. It can always go there earlier. Okay, it's sort of the base case. That's the assumption. And then the question is just how we get there. But yeah, let's see how it unfolds. I think in the next few days, we should know more. So yeah, that's my update about HBAR. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.